Hey guys, welcome back to Growth Stock Central. 2021 is right around the corner, so if you only have $1,000 in your pocket, you're probably wondering, Jake, which stock should I invest in? Well, if you only have $1,000, then picking a single stock is a higher risk but higher reward strategy. That being said, there are three stocks that can actually boost your chances of getting a good return. First up, we have NIO, the electric vehicle baby of 2020. Despite running into some obstacles with their stock price recently, they've actually been showing some pretty promising signs of recovery. In the run-up to NIO Day, which is on January 9, you're going to see a pretty good rally if most analysts are to be believed. $55 is about where I would say you should sell off your stock if you're a short-term investor. If you're a long-term investor, you might want to hold on longer. But that being said, even if you're a long-term investor, you could actually sell off your stock at 55 after NIO Day and then buy back in after the NIO Day high proceeds. I've already talked about NIO in the past in other videos, but a key thing to know is that they offer a battery as a service business model. This is very promising since it can actually bring recurring revenue into their business. Furthermore, they actually plan to introduce robo-taxis to the Chinese market by 2022, and this is backed by the Chinese government. Next up, we have Nano Dimension. This is a stock I talked about recently, and you guys seem to like it since it's one of my most viewed videos to date. Now, Nano Dimension has been breaking out over the past few days, and actually since last month technically, because Cathie Wood, the CEO of ARK Invest, bought $28 million worth of shares in this company. Obviously, they have billions of dollars under management, so it's not exactly a big portion of their portfolio, but it's still a pretty sizable bet. Take note that their company creates 3D printing machines that are used in the manufacturing of semiconductors. This is a booming sector right now, with the demand exceeding the supply. So if you're bullish on the semiconductor space as a whole, then Nano Dimension might be your best bet. Finally, for our third pick, we have Jumia. Now, fun fact, if you've been with me from the start, you already know that Jumia was the first video I ever made. Their company is often referred to as the Amazon of Africa since it's the largest e-commerce company in the continent. The African population as a whole is still developing, but foreign investment has helped with that. Once the population of over 1.3 billion people catches up with the rest of the world in terms of purchasing power, Jumia will be in the right spot to capitalize on that growth. In fact, their CEO predicts that Jumia will achieve profitability by 2022, which is a lot sooner than some other e-commerce companies. Take note, C Limited has actually been public for 3 years now and they're still not profitable. I've specifically avoided pronouncing the CEO's name in my video dedicated to Jumia because I was worried I'd say it wrong. But I'm gonna give it a try. The CEO is Pojnonek. I hope I got that right. It's worth noting I've done videos on all three stocks in this video that take a closer look at each one, so I'll leave the links in the description below if you want to check those out. Now, a couple of honorable mentions. Chewy and Tesla. Chewy is a pet food company. It's essentially the Amazon of pet food, but not just pet food. They also have, supplements and medicines. They're an online service for pet owners. Pretty general and all-encompassing. Now, they've had a really good run-up this month. That being said, they're an honorable mention because I think you should wait for them to trade a bit lower, to dip a bit before you buy in, but that's your decision, not mine. Second honorable mention goes to Tesla, obviously one of the biggest gainers this year. They just got inducted to the S&P 500, which is a big move. Congratulations, Elon. But I'd personally wait for them to trade a bit lower too, especially since they've been dropping recently since entering the S&P 500. So wait for them to bottom out before you buy a position. Again, just my 2 cents. If you're putting your entire $1,000 in one stock and you're going all in, that's a risky play. And these 3 stocks are small cap stocks, so they're pretty volatile. It goes without saying, don't put money in that you can't afford to lose, especially when you're putting all of your money in one basket. If you want to take another approach that's a bit more risk averse, then you could try spreading your investment across the 3. Obviously, that could actually lower your gains a bit depending on how things go. But yeah, if you're worried about losing all your money, maybe spread it out. If you want to go big or go home, pick one. My biggest advice overall would be to avoid panic selling. Just because it dips, it doesn't mean it's going to go bankrupt. So if your stock dips, step away for a few days until it rebounds. Unless it's actually caught in a fraud or bankruptcy situation, time heals all, or at least most, wounds. But let me know which stocks you're eyeing for 2021 in the comment section below. Like the video if you learned something because it does help out the channel a lot, and subscribe so you don't miss all of my upcoming videos. Take note, I am not a financial advisor, so make your own decisions, do your own homework, and don't invest in any stock you don't believe in, because in the long term, you're really betting on the company, so you have to at least be aligned with it. That's all for now, thanks so much for watching, and as always, I'm Jake.